Good morning, degenerates, and welcome to another episode of Boring Crypto IO, place where I read you the boring crypto news every morning, Monday through Friday, so you don't have to. My name is not important, and I'm your host, LFG. Coinbase submits petition to SEC explaining that staking is not securities. U.S. exploring ways to guarantee the country's $18 trillion of bank deposits. Money printer go burr. Crypto fear and greed index hits highest level since Bitcoin's all-time high. Guys, it is a little bit early. Not a lot going on that I could see in the news that was super exciting. Everybody is waiting with bated breath for tomorrow's FOMC meeting to see what the feds are going to do with the interest rates. Tomorrow is going to be interesting. It's going to be very volatile. So, and I don't remember if I said this yesterday, but we're in like a double-edged sword situation, right? Where if the Fed continues to raise interest rates, well, they're going to break the financial system. The banks will continue to collapse, which the reality is as sad and as devastating as that will be because it's going to hurt us. All these people at the top, they don't give a shit. It ain't going to hurt them. But it's going to hurt us as regular, everyday, hardworking Americans. But that's why we're in crypto, right? That's kind of why we're here. The pivot to that is that they're going to pause inflation rates and continue to devalue the dollar. So inflation is going to go high, which the reality is they've already done it with the quote unquote not a buyout of these banks. They've already injected something like $300 billion back into the system, with the potential of up to $2 trillion based on what they're looking at doing. Anything that, let me say it this way, any good that these interest rates, the hiking of the interest rates has done so far has damn near been reversed in just a couple of days. So that's where we're at. It's a double-edged sword. I don't know which one of those scenarios is better. It's either way, we as the people get fucked. That's just the way it really is. And it's unfortunate. So, without sounding like too much of a Debbie Downer, let's go ahead and move on with the show. But that's what we're looking at. Just be prepared for volatility tomorrow, guys, based on what the Feds come out and say they're going to do. Market, 1.16 trillion. Bitcoin dominance at 46.6, slight pullback from yesterday, if I remember correctly. ETH dominance 18.5%, and a whopping 16 Gwei will get you an ETH transaction. It looks like we're running out of steam, guys. And I think, again, this is due to everyone trying to figure out what the Fed's going to do tomorrow. So I'm not going to spend too much time on the top coins. Nothing too significant. 5%, 6%, 2%, 3%, 4% pullbacks here and there. Nothing super significant. Again, yeah, let's look at Bitcoin, see what we're looking at. We are still in this, you could call this a setting trying not to sneeze, guys. It is allergy season, and it kicks my butt. Pardon me. You could call this an ascending channel, potentially an ascending wedge, because it is a little tighter back here than it is up here. This is Bitcoin on the 1 hour. Losing steam, guys. 2 touches, technically almost 3 touches to the top of this channel. Came back down, bounced right here, which is interesting with this little downward trend we got. But just today, this morning, it looked like it was going to break out of this channel and continue down, but no, we got a bounce. Candles closed above, and we're still in this channel. Right now, we're bouncing just at 28,000. Seems to be potentially some support. We'll see if it holds. That's the hourly. I'm not looking at heavy macro right now based on what's going on in the next couple of days. Sorry, I'm just kind of looking at everything. Look, there's still so many people right now that are calling for, if we do get a pullback, anywhere from 20 to 19. I mean, do I think it would be a bad idea to set some buy orders in that area? No, why not? Again, this is not financial advice. I'm not a financial advisor. I'm just some idiot on YouTube. Take everything I say, I would say with a grain of salt, or just don't listen to me. Yeah, I mean, look, if we go down that low, I'm scooping. Why not? I have one buy order right now. Anytime you guys see this green lines, it's either buy orders that I have filled or that I have waiting in place. I have a buy order at 25,815. It's a last little, what was potentially resistance, now support before we went through this quick move up before we tank all the way down to 25 even. What I'm trying to do, just so you guys know what I'm doing, I'm trying to front run the potential of people having a ton of buy orders here, and if we do go down, we get a wick back up, or we don't even touch 25. It's too much of a round number. I've learned my lesson on that, so I go a little higher sometimes, just above what I think the rest of the world is looking at, just so I can get my orders filled. There have been too many times in my trading life where I've set a buy order at what I think the psychological level is, or a support line, and it goes it goes down just above it and then takes back off again, and I'm like, well, didn't get that buy order filled. So that's kind of how I do things. Some food for thought. Anyways, that's what we're looking at, guys. That's what I'm looking at. I keep repeating myself, but everybody's waiting with bated breath tomorrow to see what the next move is going to be, with all the banks, everything, money, blah blah blah. The next Great Depression well on its way. Weird times. All right, there I am. This is a 4-hour. We're in this ascending channel as well. We just bounced off the bottom of it. Let me see what the 1 hour looks like. Yeah. Ascending channel. Get a blood diamond. But again, we wicked down to the 1723 line that I have here, and then we bounced off of the lower trend line of this channel. So until we make a decision, I will only assume that we're going to continue to play this game. Curious though, looking at this on the hour, it looks like the 1775 one off the bounce around that area is turned into resistance. Keep an eye on that as well. So what you might be looking at is a potential triangle right here. This little guy, we might range inside this triangle, and then Ethereum needs to make a decision. Either it's going to break up or break down. Things to look at, guys. Yeah, I would say, because we got bearish divergence down here, I would say the bearish divergence has played out. That's why we've got this pullback right here. I wouldn't say we're completely out of the woods, but potentially that has played out and we're done with it. So that's it, guys. That's all I got for charts today. Again, not really a trading channel. I just like to kind of let you guys know what I'm looking at, what I'm doing. Nothing too crazy. Moving on to the news. Coinbase submits petition to SEC explaining that staking is not a security. The company continues its fight against the SEC's position on crypto staking. United States-based crypto exchange Coinbase decided to communicate proactively on crypto staking, which had recently attracted regulators' attention. The company's petition to the Securities and Exchange Commission explains why staking can't be universally labeled as a security. The petition for rulemaking was published by Coinbase on March 20th. In an 18-page document, the firm focused on how securities law treats services related to validating proof-of-stake protocols. It was written in response to the SEC's February crackdown on Kraken's staking program. The SEC charged the exchange with failing to register the offer and sale of their crypto asset staking as a service program, which it qualified as securities. In the petition, Coinbase argues that staking isn't a monolith operation concept. While some of the existing models may fall under the definition of investment contract offerings, others clearly can't. Particularly, it is the core staking service that don't meet the criteria of the Howey test. The fact that we're still using the Howey test because of how old it is and how much it really doesn't even relate to this the crypto market is insane, but welcome to the slow turning machine. The company emphasizes core staking services do not involve an investment of money, as the opportunity cost of staking is not an investment. What the users give up temporarily is the alternative use of their assets, not money. There is also no common enterprise among stakers or between stakers and service providers. Users retain full authority over their assets with the ability to unstake them, sell, hypothecate, vote, pledge, and otherwise dispose of them independent of the service provider. According to Coinbase, core staking services also fail to meet the expectation of profit standard, given that the rewards users receive are simply payments for services rendered. And finally, core staking services entail ministerial maintenance and not managerial efforts in the sense of traditional investing. Coinbase cites several historical procedures that can guide SEC on the current regulatory work with crypto staking, namely the 1973 Committee on Special Investment Advisory Services, the SEC Regulation Fair Disclosure from 2000, and the report of investigation pursuant to Section 21A of the Securities Exchange Act of 1934, the DAO from 2017. The frustrating part about that last paragraph too is, yeah, they all know this. They don't care. They're just, what they're literally doing is hoping that we paint ourselves into a corner, or that any of these cryptos or projects paint themselves into a corner by throwing frivolous, quote unquote, security lawsuits at these projects. You force them to go into defense mode. And you're just hoping, or they're just hoping, that one of them fuck up and they win. The company reminds the regulators about the significant economic consequences of its actions on the digital asset ecosystem, urging it to take a different approach to the treatment of staking services. Right after the collision with Kraken in February, Coinbase publicly distanced its staking program as fundamentally different from Kraken's, with the company's CEO Brent Armstrong expressing his readiness to defend this position in court if needed. Coinbase reiterated to customers that its staking services will continue and may actually increase despite the SEC's actions. I mean, I don't know if Coinbase is just trying to look like the knight in shining armor. Either way, anything against the SEC I'm with. That's kind of lame, but it's just the truth. Screw those guys. Let me know what you guys think. Comments down below. All right. U.S. exploring ways to guarantee the country's $18 trillion of bank deposits. They're not exploring shit. They know exactly what they're going to do. They've already done it by pumping fake ass money back into the system and turning your savings into dog shit. The current deposit insurance cap under the FDIC is $250,000, but recent banking collapses have seen calls to increase that amount. It doesn't matter. They're not going to fulfill the... Sorry. If everyone goes on a bank run, they don't have enough money to fulfill the FDIC. It doesn't matter. It absolutely does not matter. It's just bullshit, false security. Make you feel better to keep your money in the bank. I'm telling y'all, this is a game to them. They don't give a shit. They're trying to pull the wool over your eyes to keep you from pulling your money out of the banks. U.S. officials are reportedly studying ways to expand the current scope of deposit insurance that would guarantee all U.S. bank deposits should the current banking crisis worsen. Well, it already is. FRC tanked over the last day or two. Credit Suisse. I mean, what else are we looking for? The current deposit insurance cap under the Federal Deposit Insurance Corporation stands at $250,000. However, following a collapse of several banks in March, there have been calls to increase that amount. Organizations such as the Mid-Sized Bank Coalition of America called on March 18th for the cap to be lifted for the next 2 years. What would that do? Citing a need to protect depositors and to stop capital being pulled from... This is exactly what I'm talking about. All they care about is stopping capital being pulled from smaller banks and supposedly safer looking heavyweights. It's bullshit. It's a false sense of security. And they're trying to save their asses. They're trying to keep, while they continue to fucking destroy the dollar, they're doing whatever they can to keep regular people that don't know anything about the financial game, that don't know anything about the bullshit they're doing, to not pull their money out of the bank. How dare you? How dare you be a person that has money in the bank and you want to get it the fuck out because you are concerned that the bank isn't stable? How dare you? So we're going to create all sorts of BS. Sorry guys, I know I sound uppity today, but I'm over this. Like I had a long conversation with my woman yesterday, and look, we talked yesterday about Bitcoin potentially going to $1 million. Do you know how devastating, like, as much, like, you guys know, as much as I would love to see that happen, not like this. Do you know how devastating this would look? Do you know how many families will be out on the streets? Do you know how many people are going to get sick, are going to be starving? It will turn the United States into a third world country instantly. And people are not prepared for something like that. It will be ugly. It'll be violent. It'll be sad. And the worst part about any of this, it's no one's fault. It's their fault. They did this to us. They created this financial system in 2008. They said they got it figured out. It'll never happen again. And it's absolute bullshit. They did the exact same shit. And here we are again, looking at our savings, looking at our families, looking at our houses, looking at the things we own and the lifestyles we have, going, holy shit. This could all be over tomorrow, and the only thing that will matter will be survival. And I hate to be like the doomsday guy, but that's potentially what we could get to if they continue to fuck with this shit. I gotta be honest, like, the things I'm looking at right now, it feels like we're at a point of no return. Like, it's coming. Whether it's a year or two from now or whatever, they're gonna continue doing the same shit, so it's coming. So I don't know, man. I'm rambling. I'm sorry, but I'm upset, man. And so should everyone else be. We absolutely should be upset because it's none of our fault. All we did was wanted to work. We just wanted to live our lives. We wanted to have our families. We wanted to just be comfortable and do what we're doing. And these asshats at the top continued to fuck with the money. And now we're gonna be the ones paying for it. Sorry, ran over, guys. According to a March 21st Bloomberg report citing people with knowledge of the talks, Treasury Department staff members are currently discussing the possibilities of the FDIC being able to expand the current deposit insurance beyond the max cap to cover all deposits. According to the FDIC, domestic U.S. bank deposits totaled $17.7 trillion as of December 31st. Sorry, coffee break. They ain't gonna be able to guarantee shit. It's all bullshit. The move would ultimately hinge on what level of emergency authority federal regulators have and if the insurance cap can be increased without formal consent from Congress. Oh yeah, we're gonna overstep Congress? Of course. It's just like the United States now. It doesn't matter. We're just gonna do what we want. Bloomberg sources indicated, however, that the U.S. authorities don't deem such a drastic move necessary at the moment, as recent steps taken by financial regulators are likely to be sufficient. As such, they stated that a potential strategy is being whipped up. Oh, we're just going to fucking just create something out of nowhere. Just in case the current situation gets worse. The U.S. government says, I'm reading Kim.com. He's usually got some good stuff. U.S. government says it studies ways to guarantee all bank deposits if the banking crisis grows. They say that because they know that the banking crisis will grow. They don't have the $18 trillion required to protect depositors. Exactly. Run on the bank while you can. Gold, silver, crypto. Here's a caveat to that. Some of my homies and some people that I look up to were talking yesterday. And trust me, you guys, if you've been watching the last couple of weeks, I'm going, what the hell can I do with my money? And yes, I'm looking at Bitcoin. And then yes, I had also talked about precious metals, heavy metals, etc., etc. We'll just say gold. And the question was brought up, if people are just trying to survive, right? If it's as bad as a depression or whatever, it's not like they're going to give a shit about getting some gold in their pocket. They're going to want some food. So even a hedge to the gold we're talking about, I know it sounds so doomsday-ish, but this is the stuff that looks like might be coming. The reality is this is what has happened in other countries for years and years and years while the United States has been riding high. We're not what's the word I'm looking for? I can't even think of it. All I'm saying is it could potentially happen here. So it wouldn't hurt to be a little bit prepared, right? But we're looking at dried food goods, things like that. You know, like, God, this sounds so insane. You know, like 25-gallon buckets of rice and beans and seeds, canned goods, etc., etc. Things like that becomes way more valuable than fucking gold if this gets really bad, right? People don't give a shit about gold if they're just trying to feed themselves or their families and survive. Grocery stores, restaurants, supermarkets will not be a thing. Basically, it's going to be community oriented after everyone tries to steal everything from everyone else. Again, my point, you've got to broaden your mind, and that's what broadened my mind, is you got to broaden your mind a little bit outside of just money. What does survival look like if this gets as bad as it could get? Sorry, don't mean to make your Tuesday look like a nightmare, but these are things that people should be thinking about. In response to Silvergate Signature Bank, Silicon Valley Bank going bust in recent weeks, the Federal Reserve rolled out the $25 billion bank term funding program on March 13th as the government pushed to stem any further contagion. Hasn't done anything though, has it? Meanwhile, in a March 20th press briefing, White House Press Secretary Karine Jean-Pierre was specifically asked if the federal government was supportive of a push from small and mid-sized banks to expand FDIC insurance beyond $250,000. But Jean-Pierre was tight-lipped, surprise, surprise, on the Biden administration's view, saying on that, our goal is to ensure the financial system is stable, not to ensure that you guys are protected. And emphasizing that creating a fair playing field was the focus of Treasury and bank regulators. What the fuck does that even mean? I'll read this quote because I'm curious. And as you saw, due to our actions this week at the direction of the president, Americans should be confident of their deposits. Okay. Ugh, so frustrating. We'll be there when they need them. Bullshit. Just because you have paper cash at a bank does not mean it's worth anything. Do a little bit of research on the Great Depression or any financial collapse of any economy in the history of the world. Just because you have dollars don't mean they're worth anything. And that's the bullshit they're trying to push over your eyes right now. They're trying to get you just don't pull it out, because we can continue working with fake money. Don't pull it out, because if there's no fake money in the banks, we can't play with the fake money. Just because you have a paper dollar doesn't mean it's worth anything. That's all I'm saying, y'all. And so again, that's what our focus is going to be. We don't have any new announcements at this time, but clearly we want to make sure that our financial system is stable, she added. Bullshit, guys. Anyways, I've rambled enough on this stuff too. I'm sorry. Let me know what you think. Comments down below. Last but not least, final story of the day. Sorry guys, I'm super sleepy too. Allergies. I have really bad allergies, and every season it like puts a fog over your head. So I've been trying to wake up since 5:30. All right, crypto fear and greed index hits highest level since Bitcoin's all-time high. Sentiment towards the crypto market is the most positive it's been since around the time of Bitcoin hit its all-time high almost 16 months ago. The Crypto Fear and Greed Index has hit its highest index score this year, reaching levels not seen since Bitcoin posted its all-time high in November of 2021. A March 2020 update of the index showed a score of 68, placing it firmly within the greed territory. If you're not familiar with the Fear and Greed Index, it's kind of a layman's barometer of potentially when to buy, when to sell, etc., etc. Again, the most generic way to say when to trade or how to trade or when to buy, when to sell is you buy into fear and sell into greed, and that's kind of what the Fear and Greed Index is kind of just been a generic barometer. The crypto fear and greed index aims to numerically present the current emotions and sentiments towards Bitcoin and the cryptocurrency market, with the highest score being 100. Last time the index recorded a score above 66 was on November 16th, 2021, just days after Bitcoin's all-time high over 69,000 was recorded on November 10th, 2021, according to CoinGecko. And I don't know what the metrics are of how they even calculate the Fear and Greed Index. I don't know what like if it's based on inflows and outflows of money into Bitcoin or the crypto market in general. I have no idea. The sentiment around BTC and crypto has been bullish since the collapse of Silicon Valley Bank and the resulting fallout in the traditional financial system. Over the past 7 days, Bitcoin has recorded gains of around 27.8% as per CoinGecko data and hit $28,000 for the first time since June of 2022. Crypto Financial Services Matrix Port's head of research Marcus Thielen suggested in a March 20 analysis that there is more upside on the cards for BTC as the liquidity story continues to be in Bitcoin's favor. The analyst had adjusted his near-term price target of $36,000 by June of 2023, while he has tipped the year-end target of $45,000. What's his resistance set at? I guess 36. Meanwhile, Charles Edwards, founder and CEO of investment firm Capriol, predicted an even more ambitious price target of $100,000 for Bitcoin. In March 14 tweet, Edwards called BTC price action in 2023 a textbook perfect Bitcoin pump and run reversal. And based on his interpretation of the data, he thinks the target is over 100,000. However, he did note that chart patterns do fail. You think? Don't use this as a trading investment plan. Manage your risks. Ryan Selkis, founder and CEO of crypto analytics firm Masari, shared a similar rough prediction in a March 16th post explaining that he thought over the next 12 months it's possible for Bitcoin to hit $100,000. I gotta be honest, with all this bullish sentiment, guys, my brain instantly defaults to, if there's this many people bullish, we could fucking go down. According to Selkis, a combination of bank failures and changes to federal monetary policies, we'll see more outside investment into crypto. That's him talking about that. I don't even know who that guy is. But the key is threading the needle so institutions can buy it and defend it alongside of us. Best case scenario right now, Selkis said. This is an optimistic bet on the future as BTC is treated as a life raft and peaceful exit option, he added. Bitcoin has been ranked by investment firm Goldman Sachs as the top performing asset this year, gaining 51% in the year-to-date absolute returns. In a March 17th note, the asset manager revealed Bitcoin's total return year-to-date has outpaced the likes of information technology, gold, the NASDAQ 100, and S&P 5, among others. I don't know, guys. What do you think? Bitcoin going to 100K soon? We've got predictions of 100K, predictions of 1 million, and Fear and Greed at 66. Gotta be honest, I hate to be the bearer of bad news or the negative Nancy or the bear in the room, excuse me, but if I see a lot of people talking bullish like this, it makes me feel bearish. Let's look at Bitcoin one last time before we get out of here, guys. Let's see a 30-minute 30 minute. 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 30 played out, bounce. I mean, we're still respecting that trend line. Yep. Anyway, guys, just keep an eye on this stuff. Until something breaks or something changes, these are the swings I'm looking at. Outside of that, I want to get you guys out of here. If you do enjoy the content I provide here on BoringCrypto.io, please, by all means, subscribe to the channel. Turn on your bell for notifications so you know when I do post a video. Watch the videos, like the videos, and please share the videos if you find the content valuable. And I'll see you guys bright and early tomorrow morning. I'm out of here.